All right. I'll give it another minute.
So, hi, it's Mike Mitchell here. I don't know if you can hear me.
Yep.
But one of my questions is going to be, if you don't cover it already, is as I understand it, these things run year to year. So it's a 12-month thing. So if your build is going to take 15 months, that means you've got to have two. Got to pay for 2 years worth of insurance, or is there a way around that? Or do you just decide to be risky and say, I'm only going to pay for the last year and take your chances with the first part of the build, or anything? Because I mean, premiums look like they could be fairly pricey, and I'd rather not pay for 2 years worth of insurance if I can get away with one.
Understood. So Helmut, if you'll address term of the insurance either in your presentation or out, we'll make sure to answer that question for sure.
Yeah, well, listen, I'll probably address that because that's a pretty common, people want to know. Because here again, depends on the size of the house, the construction. Average builder before the delay in materials would take a build anywhere from 4 to 6 months on a normal, house. Of course, you're getting multi-million-dollar big houses. The big customs are going to take longer. But you can get policy periods. Most of your carriers will offer a minimum of 1 year. I know when I do large one shots, which is an individual policy for one house instead of what they call a reporting form, and I get into that. But we can write a 12-month, 16-month, 30-month, whatever the term you need for construction. And then they'll have like a minimum earned premium. So your minimum earn is normally going to run about 12 months. So if they're quoting a 2-year policy, they may start your minimum earned at about 18 months. So you'd pay for 18 if, so you can tailor that and work with the underwriter to get, so, you figure 2 years, but the house is completed in 18 months, you will get 6 months of premium returned back to you.
Okay, that's good to know, because the impression I got was that it was just 12 months and then another 12 months, etc. So it sounds it's depending on the underwriter. Obviously, it's more negotiable.
Correct. And the companies that will offer, the coverage for you.
Sure.
But most of your admitted carriers are going to allow you to, on a custom, extended period. Some may go 12 months and say, well, then we guarantee renewal for another 12. I don't like doing those. Carrier I use, I can, I'll write a one shot. If I need a 24-month policy, that's what I write. If the builder says it's going to take 18 months, I'll say, well, let's do a 2-year, and then I can return premium. If you only take 18 months, we'll set that as minimum earned.
Yeah.
That's a great segue. And I think that the opportunity is really everyone. We would like to think of insurance sometimes as just a straight document or a prepackaged document, but Helmut, you've really convinced me that everything's negotiable, everything's up for discussion. You need to ask those questions, and our offer and our promise is that everyone leaving tonight's meeting will feel more comfortable with the builder's risk section of the insurance policy. So it was a request, and we wanted to make sure to get to that. So let me open us up with some information about the HBA and then some housekeeping. So I'll start my spiel. The home builders associations are really the voice of the construction industry, both for home building and for commercial remodeling. Our Metro Denver HBA performs over $5 billion annually in and around the Metro Denver area. Metro Denver HBA has been in existence for 80 years, and members produce over 1 million homes and add millions of square feet to commercial, retail, and industrial space. Our Metro Denver HBA is part of a larger NAHB, which is National Association of Home Builders. That federation represents 140,000 companies, or 10 million plus members in that federation and association. So you can find more information about the Metro Denver HBA at www.hbadenver.com or by calling the office 303-778-1400. And if you go to hbadenver.com and go to the top right-hand corner, you'll find the Metro Fire information. You click on that and you're going to find a list and a recording of all the videos that we've put together for this group. Now, tonight's presentation is hosted by the Marshall Fire Task Force Finance and Insurance Subcommittee. We are presenting Builders Risk, Liability Insurance, the Customer Protection, presented by our good friend Helen Mutt of the Hartwig Moss Agency, moderated by myself, Jake Harris, and Bill Wallet. Helmut Mutt has been in the insurance industry for over 25 years. He's an affiliate of the Hartwig Moss Agency, a 150-year-old independent agency in New Orleans, Louisiana. He launched a builder's risk program for the HBA builders back in 2011 in Louisiana and is now in 8 states, primarily southeast region of the country. Helmut holds certificate of insurance consult designation from the National Alliance of Insurance Institute, attends numerous seminars dealing with contractors and risk management annually, currently part of the task force addressing insurance issues in the state of Louisiana. Prior to working with the insurance industry, he was involved in commercial industrial contracting, specializing industrial coatings for metal and concrete protection. Helmut is actively engaged in the HBA on many, many levels, including local, member, currently in 22 state and national. In his free time, enjoys fishing, competitive shooting. He has 5 dogs and 6 grandchildren.
I'm crazy.
I am really excited and really thrilled to have Helmut here. He did us a great favor. So our objective in finding a resource for this event was to find somebody who had forgotten more about insurance than I think I'll ever know. And Helmut was that guy. So we reached out through the network of the HBA. Helmut obviously is coming to us from Louisiana, but he is an industry and revered as an industry expert in all of the HBA and all of the NAHB as the guy to talk to for builders risk. So we're really excited tonight. And I think this is going to be a great conversation and questions. As far as your questions, if you can put them into the chat, I will pepper them in through the conversation and we will keep this dialogue going. No slides for tonight. It's basically going to be a Q&A with the introduction. And Helmut, I turn it over to you. Take it away.
Thank you, Jake. What I'd like to do is I'm just going to kind of touch briefly on what builder's risk insurance is, the application within insurance. If you have questions, again, put it in the chat room. You have a question as I'm going, put it in there. We'll break, answer it. I'd like to get dialogue going both ways. Makes it a lot easier, and I think people retain the information and find it more useful than if you're just looking at slides. Slides on insurance tend to put most people to sleep. Yeah, I know it does me too when you got to read all this stuff. So I'm going to jump into, and Louisiana, I know is different than Colorado, and talking with Jake and people there dealing with y'all have been involved with fires, houses destroyed totally, having to rebuild. There's a lot of questions on the homeowner side as well as contractors. The builder's risk insurance, and I guess the easiest way to dive in, builder's risk. And the first thing to get it clear is a lot of people, when you say builder's risk, they assume that that's covering liability, property, any risk that a builder might see in construction. It's kind of a bad name because builder's risk insurance is primarily property coverage for acts of God perils, fire, windstorms, tornadoes, rainstorms, hail. It normally excludes flood. It excludes earthquakes. Some companies you can buy that by endorsement, but the coverage is very basic in that on the new construction, it normally covers from the time the foundation is poured and you start framing going forward to the completion of the house, at which time the house is sold, and then the builder or the homeowner, if they secured the policy, would normally, once you're going to occupy it, you turn it into a permanent policy, which is your homeowner's insurance or commercial property insurance somewhere, but it comes off the builder's risk. A builder's risk is a very finite amount of time, going from 0 to this point where it's put to its intended use. And I'm going to keep that phrase in mind because that's one of the triggers that ends builder's risk is when it's put to it, the property is put to its intended use. When the builder or the owner has no longer a financial interest in the property, in other words, they've sold it, or if they abandon the project. If they walk away from it, your coverage ends. So those are 3 little things to keep in the back of your head with this. Builder's risk, like I said, almost all property carriers in the United States write builder's risk. Probably one of the predominant names is Zurich, which is now U.S. Assure. They write in all 50 states, probably one of the largest builder risk writers in the country. Then you go down to everybody else. Access has a program which backs our HBA program. Liberty Mutual, State Farm. Most carriers that have property insurance will offer a builder's risk. So as the homeowner, and here again, if your home was destroyed in a fire, and I'm going to go that way, you have damage. Now you want to go in, you're looking for a contractor, and it depends on the amount of damage done to your house. You know, most of the time you're going to hire subcontractors. Now you have to decide, and this is the starting point. If you're the homeowner, you have a homeowner's policy. That homeowner's policy, let's say if your home was insured $500,000, 500,000. I think the median price now across the country is like 385. It's been increasing. You know, so we use 500,000 as just an arbitrary number. At 500,000, you have policy. Before you do renovation or remodel work on that home, you need to check with your homeowner's insurance policy to see if they will cover that work, endorse it. They would have to endorse that to your current policy. Some homeowner insurance companies will, some won't. You have to ask your agent, reach out and say, look, I've got to do repairs on the house. Is this covered? If it was damaged by fire, you filed a claim with your homeowner's insurance, and let's say you had $100,000 worth of damage, you know, and you say, okay, I want to do the repair work. Can I endorse my current policy to pick up that exposure? And if they tell you, yeah, get it in writing and get a copy of the endorsement, understand what the premium charge is going to be. And as a homeowner, you're good to go with that. They're going to just extend that to your homeowners. The advantage in doing that is that you have liability insurance on your homeowner's policy already. So you have those things in there that are covered, your contents, things like that. If they won't allow you to endorse your current policy, then you're going to have a choice to make of either securing builder's risk insurance for yourself or having your contractor secure builder's risk. Some contractors don't mind getting it. They prefer to get it. Here again, it's working with your contractor, how you want to set that up. If he's going to pay for it and then charge you, it's probably going to cost you a little bit more than if you bought it direct, but then you don't have the aggravation of dealing with it. And on a policy, if you're letting the builder secure the policy, there's a term of additional insured, which is what you would want to be added to that policy. That only thing that means is that if there is a loss during the renovation process of that $100,000 worth of work, that check for the damage would come to the builder and to you as an additional insured. You both have to sign off on the check to release the funds. And here again, remember, insurance is just to make you whole again. It's not to make you better. It's just to get you back to where you were. So that's always where you try to look at those numbers. So once you decide how you want to go with it, it's finding a carrier's, you know, if you have your agent, here again, that's kind of a disclaimer, you know, anything that we're talking here, discussing, always check with your agent to make sure you want to see sample verbiage of the policy, and don't be afraid to ask them questions. You know, they always say that, you know, the devil's in the details, and with insurance policy is a contract written by attorneys. It's very legalese language, and its words are very, very important on a policy. The cheapest policy may not always be your best protection. So you want to have it reviewed, have an agent, have a friend, someone take a look at it. What do you think of this? You know, are there coverages there that I'm looking for?
Helen, if
Sure.
I could interrupt. So Annie brings up a good question. I think statistically, and I know this may not be the case across most of the insurance claims, statistically speaking, the Marshall Fire, we had a much larger number of total loss situations than we did affected property. So can you go into the difference? And I know you said that there was a portion of the property,
Right.
Let's say the property's lost.
Okay.
I guess people are trying to understand and how this works, and Annie, check me on this. We're trying to understand, the homeowner had an insurance policy. They lost the house, they filed the claim, they've gotten the payment, they've engaged the contractor. Now the question is, well, you know, am I still keeping the homeowner's insurance policy, I don't know, we've had a question on that earlier this week. They were trying to get them to keep the insurance policy. They're like, hey, there's no house. And then they
Right.
want to pick up builders. And then that kind of bridges that gap between homeowners policy that they had up to the loss, and then the homeowners policy they're going to have to get once the home is complete.
Right. The danger is by letting your homeowners go completely is you lose your liability protection.
Okay.
On your homeowners. Your builder's risk is not going to replace your liability. So if your house is a total loss and you're hiring a contractor to do the construction work, they will have general liability, but his liability is only going to respond to the work of the contractor and the subcontractors on the project. Your land is still you're liable. They don't care if your house burned down. If someone's walking your land and trip and falls and sues you, your homeowners is what's defending you. Not the contractor's policy and not a builder's risk. So if you're going to let your homeowner's policy go, then you have to secure a standalone liability policy for your premise and your land.
Can I ask a question, or is it better if I put it in the chat?
No, you're
Go ahead.
welcome to it.
Okay.
So what do you
So
got?
if you have a total loss, and is your insurer required? Some of the people in the Marshall Fire are being told by either their mortgage company or their insurance company that they cannot reduce it to liability only. Have you-
Right. Yeah, well, most of the time, because it's a package, homeowners policy is a package policy. So if you cancel the policy, you're going to lose the coverage. So you have to keep the policy in force or buy a standalone liability policy.
So
You can buy a standalone liability.
yeah,
You probably have to go in as a surplus or just buy a dwelling fire policy or cheaper policy. But here again, you know, if you totaled out, you've lost your contents, you've lost everything, you know, and it always, you know, you need to talk with your agent, because here again, a lot of people have their cars bundled. They have umbrella liability policies, which are tied to the liability limits on their homeowners. So if you give up that homeowners, now you have a big gap on an personal umbrella, so that they all kind of touch on each other. So you really want to talk, you know, and ask your agent, okay, if I cancel my homeowners, what do I do about my liability?
Well,
Yeah.
so, but she brought up a very interesting point, because now you're getting the mortgage company making requirements on the insurance. Now, again, if they're a lien holder on the property, there's obviously a risk and a liability. And in my experience with mortgage companies, any kind of financier, they want to make sure they're protected. So their insurance,
Correct.
they will always require to have that insurance enforced. And not sure that any amount of arguing with these mortgage companies is going to affect any of you. Has anybody had success being able to argue their way out of that with anybody? I see William made a mention of it, but he changed his renter's insurance and then got liability and canceled it. So has anybody had success with that? And then I've got
What was
two
the
hands up
question
that I want to
again?
address
I'm
too.
sorry.
We
When you
did
repeat
have-
the que-
we did have somebody on Facebook who had fought that war and Lisa, this is about the people who are required from their mortgage company to have full coverage on their dirt, which makes absolutely no sense whatsoever.
Right. Well, you know, the problem is with a bank or mortgage company, if they lent you, you know, you have that $500,000 house and they lent you $500,000 and your lot was $200,000, the actual structure is only $300,000, but the bank wants the $500,000 policy enforced, which is always a battle with them, because I'm like, you're insuring the dirt, which there's no value to that. But the banks just follow the guidelines. They say, well, this is what our guidelines say we have to have, and that's what we're going to do. And they won't deviate.
Yeah, they're checking boxes.
Right.
Mark, I want to get to your question, and then Ted, you're up next. So please.
Good evening. Yeah, we were in Louisville, and we've selected Boulder Creek to build our house. And I've seen a sample contract, so I know I haven't seen the builder's risk policy, but they do purchase and name me as insured as well as themselves a builder's risk policy. I'm currently in a condo. in our own condos. So, and I'm with Amika. So I transferred everything over. I have, we only have one car left, but it's a combined policy with umbrella coverage, very high limits of liability, the car, and as I said, the building is covered by the condo, but our policy covers a certain amount of the interior of the
Right.
building. So what is your guidance in terms of what I should do to proceed?
If they're offering the builder's risk, the only thing you want to, if you have a condo policy, ask your current agent with the condo policy if they will pick up land, your land exposure of the house that was burned. If it's, less than 1 acre, it's not that much. Now, what they will normally do is exclude any construction activities. And you just want a common area on the ground, so because the contractor's liability is going to pick up the exposure of the construction. You just need to get your property that you own covered. And your condo policy may be able to add that. Most of the time, if it's an acre or less, they can add that to our current policy, and it's a minimal charge, and just
Okay.
extend liability coverage.
What is that when you say liability?
Liability is always third-party litigation.
Okay.
That's someone else is suing you because you own something that caused damage to them. They walked on your land and tripped and fell. That's liability.
Yeah,
Right,
that
right.
was the example.
I understand that. The question, though, so that is all I need for the land is the liability coverage. Is that what
Correct.
you're saying?
Correct.
But
No.
my understanding is, and I'll have to read through the umbrella and the liability policy, is that I'm covered in anywhere and in any circumstances up to the limits of that umbrella coverage. But you're thinking that the land is not, something that happened on the land is not covered.
Right. If you cancel that homeowner's policy and now you have a condo policy, if your homeowner's policy is canceled and you don't have an endorsement on your condo policy to pick up that land exposure, you have no coverage on it. So your umbrella, they're going to have requirements. Normally, it may be 250,000 self-insured retention. They have underlying limits of 1 million, whatever they require. If you don't have underlying insurance to provide that first step, that becomes your deductible.
Okay.
So your umbrella would let's say respond after the first $500,000. The $500,000 of liability might be on your homeowners. Your umbrella picks up from a half up to 1, 2, 3, 4, 5, whatever you want to purchase.
I see. So it'd be that delta, that difference.
That delta difference from the liability to where your umbrella picks up, you're on the hook for that.
I gotcha. Okay. Okay.
Yeah, so
but
that's
anything
why-
over that amount, I would be covered because that would be under the umbrella coverage.
Under the umbrella, correct.
Okay. But could the builder have liability coverage as
well,
or I would?
The builder's going to have liability just for his construction. He's not
Okay.
going to cover anything related, anything. So if they're excavating land, digging out the foundation, replace it, and someone falls in that hole where they're working, he's at fault. He's liable. His insurance will respond to that. The thing is that you as the property owner, you're going to get named in the suit.
Okay. Gotcha.
You're going to get sued, and 90% of what insurance does is cover defense. That's where the expense. I mean, you can spend
Okay.
$100,000 with attorneys in one
No,
day.
I've been, I know, unfortunately, I know too much about that. So,
Right.
so
So that's where they get you. So that's,
somebody's we're not going to start construction. And even after we have construction, somebody could ride a bike or a bicycle or a motorcycle. That's
on your property, and you're in trouble.
Gotcha. No, thank you very much. Really appreciate
Very welcome.
That's a great question. And Tad,
Thank
please
you very
continue.
much for good evening for taking my question. And we have a homeowners policy, and we were able to reduce it to 90,000. So we have a liability.
Okay.
So that's good, and that's how we decided to keep it, to have that liability. But my question,
how did you do that? What was the process? Can I ask what was the process?
yeah, absolutely. The process was very simple. We talked with our agency and said that we are complete loss and we have coverage for the whole building, which doesn't exist. And they say, well, our policy says that you can lower it for the time of rebuilding and the minimum amount is 90,000, which give you still liability and some property coverage and whatever. For example, if you were burglarized when you were visiting and you have some stuff in the car, for example, so this would cover. So, and of course, nothing is in the whole, so that would not be a part of the loss.
Sure.
And my question consists of practically, and I will be brief, I made three little notes. The first, who in fact is buying that builder's risk policy, the builder or the owner?
Okay, it's your choice. Some builders prefer the homeowner to get it because they don't want to mess with deductibles or anything like that. Some builders prefer it because then they're in control of the insurance. As the named insured, you could be added as additional insured, so you're still getting, paid on it. A builder in many cases prefer to have the insurance. So let's say it's, $50,000 of damage. If the policy's in your name, the check's going to you, and then you decide, well, I'm just going to keep the money and I'm not going to finish the renovation. I'm just going to call it quits. And the builder's got $30,000, $40,000 in expenses out. He's going, wait, I got to get paid. So now he ends up in litigation. Even if he's named as additional insured, it's the process. A lot of builders, prefer to be in control of their insurance. That way they know whatever the work they have on the ground, they know what the bills are, what they're paying, their cash flow situations. They know the check is coming to them, so they can extend it out to their creditors and their subcontractors to keep getting them paid, to keep them on the job. It's builders I got in Louisiana, if they write the policy, they'll normally add it to the contract and just let the homeowner know what they're doing, providing sometimes they could save you some money on it. And then they're going to just, I tell most of my contractors, it's in that addendum to your contract, just that the homeowner is responsible for the deductibles. A normal deductible, it can be a 1,000, 5,000, some of your bigger homes, 10, 25,000. Down south here, we get into percentage wind deductibles, which could get very pricey. Most of your builders first down here run a 3% wind deductible. So if you have you do it $1 million house, it's a lot of money.
Yeah, and again, could you give examples of what that builder's risk policy covers? You said that mainly there were acts of gods, but what could be the amount, for example, on a rebuild that would cost, say, $1 million, and that's probably average in our area. What could be a cost of that policy, and what would be the coverage, total coverage on the average? I know that'll differ between different.
Yeah. I mean, most of your policies, you're going to write it with a when they look at underwriting on the policy, they're going to look for the estimated square footage, how long it's going to be under construction, and then the total insured value, the finished structure value. If it's $1 million finished project, they're going to rate it at $1 million, then they have a rate what they're going to apply. And here again, it depends. If it's, we were talking a little bit earlier, you can buy, let's say if you're doing $1 million house project, is it going to get done in 12 months? Probably not. So a lot of companies will write a 12-month policy and tell you, well, we can extend it. We're guaranteed to extend it. Some companies will quote a longer policy. I know when I do large custom homes, I would normally do a 24-month policy, and then I just have a minimum earned. When I talk with the builder, I go, it's always easier to give money back than it is to get a company, because situations change. So rates may go up, and if I got the 2-year policy and I do an 18-month minimum earns, so the builder says, I'm going to get done in 18 months. I go, okay, we'll write for 24 months. And if you're done in 18, we'll return that 6 months premium back to you, and we'll just write the policy that way. So all of that is really, it depends on the company, but with most underwriters and your agents, all of that is negotiable in insurance. The value, the length of the contract. If you want a 12-month policy, most of them, if they're big builders, they have reporting forms. They can go to monthly reports, annual reports. There's a lot of tools. So it's really what is your builder trying to accomplish, the time of construction. Then they're going to have things what they call soft costs, which is an included limit, which is all your filing fees, architectural fees, things like that. Costs that are not They're the soft costs in the project, but they're not really part of the structure. Some companies, the company I represent, we start with a blanket 25,000 in soft costs. So on a house, if the house is total, you may have to get re-permitting, all kinds of things like that. If you're rebuilding, now you get into ordinance changes. So you can get all those coverages. It's really sitting down with your agents. Okay, this is what we want to do. Give me a price, and you can talk. Talk to the builder prefers to carry it, and just say you want to see a sample of the policy. What
So-
policy he's using.
Helmut, just to clarify and just to make this plainly obvious for everyone listening, there is no prescription of who
Right.
buys builder's risk. It can be bought by the owner, it can be bought by the builder. Either one can buy them. And it sounds like, based on what you're saying, it's the person who is most comfortable with the process and is most comfortable with the program. And I'd like to point this out, that given the change, right? Because let's face it, we had a catastrophic loss of almost 1,100 homes. There are builders that are working in this situation that this is not their forte. So they may not be as familiar with the different rules and responsibilities. I mean, we talked to people and they said, hey, I've been a remodeler for years. I'm going to build a house because of all this demand. So being very aware of that situation and being aware of that, but it basically allows you to have the conversation and to be confident and say, hey, listen, I listened to a webinar. It's either you're buying it or I'm buying it. It comes down to, and I think Michael put up here also as well, that the builder made a point of saying, well, if I buy it and you need to make a claim, I've got to charge you, I've got to do all the paperwork, I've got to argue, I've got to do this. So it really comes down to who wants that control if the situation, because I don't know a contractor out there that's not going to charge for it, right? They're not going to absorb that as part of their costs. And the opportunity becomes, okay, well, if it's the cost is going to be there, if the homeowner is completely not of this world from a construction side and doesn't want to get involved, then they can ask the contractor to pick it up. And if the homeowner is very involved and wants to be involved in that situation, they can do that. And I think that it just becomes very, very interesting. Ted, did you have additional follow-up? Sorry to interrupt.
The only question would be, I understand everything what was said, but if hypothetically again, and if it's impossible to answer, please, that is.
Well, I was like,
Yeah, but hypothetically, on a 12 months project, cost of rebuilding, say, $1 million, roughly, what cost of policy we would be talking about? Wild guess.
Wild guess, Colorado. I was trying to, non-coastal, I mean, your rates on here on an annual policy.
Yeah.
Can I answer that? Because I've been talking to people about this.
If you're talking, I mean, I know down here, it runs about 18 cents per $100 of value.
Oh, okay.
Around here, we've been seeing around 1,500 to 2,200 for a 12-month policy.
What value
Okay,
house?
thank you.
Let's say 900,000-ish.
All right, thank you. That would exhaust my question. Appreciate it. Thank you.
Anytime. Thank you, Ted, for joining and participating. Lisa asked another question that I'd like to get to, and Helmut, you and I kind of addressed this one in the beginning. What could be reasons, or what hypothetically speaking, what could be a reason why somebody would be declined a builder's risk policy, right? So you have the homeowner's insurance, the catastrophic loss, you have a combination of builder's risk and liability now for the land, which I now understand paramount. So those two coverages carry you from occupied house back to occupied house, and then you get your homeowner insurance. And that makes me feel nice, warm and fuzzy, right? That's my insurance blanket over that space. And you can get additional umbrellas and everything else. But have you heard of, or why would you find somebody who's been declined for builder's risk?
Most of the time, it all comes back to the underwriters and what the criteria of the company is. On the new construction or total rebuild, the most time, if it's denied, it's going to be, they want to know if the foundation was damaged or not. Are you going back on top of the old foundation, or is it being jackhammered out? They're going to have questions, and that's going to be the biggest one on the total rebuild. You know, what they're looking for, and then what protection class you're in. When you get in, you know, and here again, if you're up in the mountains, you start getting 5 miles away from fire stations, they get real nervous. Carriers just look at that and they don't like the exposure. They go, no, thank you. And most of the time, like if you get into a 9 or 10 protection class, they'll, if they're willing to quote it, you're going to pay extra for it. I mean, you're going to see a surcharge coming on that. And then as values of the house go up, you know, if you're talking a $5 million house, they're going to charge you a surcharge for that higher value because the partial loss.
Well, you also made mention earlier in the conversation regarding, I think maybe it was even directly to me, the opportunity is that if you're not dealing with a scratch and rebuild, insurance companies are far more weary of what we call carbon houses, right? Houses that have been affected by fire, because there's question marks sitting inside the structural components, and they become much more problematic and much harder to underwrite because of the additional risk and the potential structural. Because once fire's gotten into those structural elements, and we see this a lot in older homes that have been, you know, scorched a couple times over, right? You know, kitchen fires, grease fires, all those fun things. That was something you mentioned to me that would be a reason why a builder's risk policy would obviously be declined for a not full rebuild, but for a partial rebuild and partial reconstruction.
Right.
Lisa, do you have any additional context?
Yeah. Well, I'm not the person that this applied to. I'm asking this for some other people, so I want to make that clear. But one interesting thing I discovered in asking this question is that the people who mentioned it to me are all residents of unincorporated Boulder County, the eastern part of the county, and are not residents of the 2 municipalities affected by the fire. So I was wondering if that had anything to do with it. I want to point out, though, that some of them, or I think actually all of them, were able to obtain them from other places, which I also thought was interesting. So I think that I'm not sure if they had approached their original current insurance company and said, you know, I need a builder's risk policy, and their insurance company said no. I don't have like the whole story and context here, but they were declined, and then some of them were able to get it through other places. So
well, let's lay the groundwork here, if I can, for insurance. And I think the same applies for banking, and I deal much more in banking, but I want to make this very clear. Each different entity has their own appetite for what they like to do, right? When you're a banking entity, they have a certain area they want to stay in. They have a buy box for which they're going to play ball in which they're not. And if you fall outside of that, their constraints, that may not work. I absolutely see that being the same case for companies, where these insurance companies play in this. They play this ball, and if somebody calls in for an external contact, they not play ball with that carrier, or they may not play ball with that policy. Is that fair to say, Helmut?
Yeah, I mean, their appetites change, and you know, if you had a carrier that had a lot of losses in the municipalities in the fire, you know, if one carrier had an exorbitant amount of losses, they would just say, we're not writing any more policies. We don't want the exposure. We got hit, you know, because reinsurance costs are going up. And that's a big thing we're fighting across the whole country. The insurance that insurers buy to cover their losses is skyrocketed. I mean, if you can just, Ian added over 120 billion in insured losses to the cat market this year. That's one storm. Right. You know, and that's not to mention the fires in Australia, the floods in Germany, everything that's going on around the world. We're a global economy, and reinsurance is global. So even your local company, you know, they have to get the reinsurance from these companies. If their rates are going up, or they're saying, okay, well, we don't want capacity, and we're not going to open this capacity. It's too risky. They can't get the investors right now because of the beating they've taken over the last couple of years in the insurance industry. Investors are going, no, it's too risky. You know, they offer great returns, but you know, too many people lost money on it, so they tend to pull back. But you know, so it is very understandable that if you went to a couple of agents or companies that are writing right there. If you go to an outside company and you may be having to go to an independent agent, not a State Farm, big thing is independent agents are captive. Captive is like an Allstate, a State Farm, Pure. They work for one company, they sell their products, and that's all they really have access to. So if you're in your home was insured with State Farm, and State Farm basically shuts down an area, they're not going to give you builder's risk. They're not going to quote anything for you. Where an independent agent goes to multiple carriers as well as what they call surplus companies, which are outside of regulated. That's the Lloyd's of London market, and that's really where builder's risk started. Is the Lloyd's? It's what they call marine insurance because it's mobile. So an independent agent may be able to access companies that are offering policies. They see an opportunity to come in and get premium for that risk. They didn't have the big losses. So they go, oh, this is a windfall. We're going to make money on the builder's risk side. So they would come in and offer the right policies. Yeah. Just because one agent says no, don't assume that the industry's saying no.
Are there any other specific questions before I get into a little game that I'd like to play at the end of this when it comes to insurance? No? All right. Helen, what I'd like to do, and this is kind of spur of the moment, but I think it's very relevant. It's almost like an insurance bingo card, if you will, because I believe that there's different specific situations that people may or may not expose. Now, I would highly recommend everybody play insurance bingo with your insurance agent, right? Play this game with them and ask them these questions because you want to know the answers to these questions. So what I'd like to ask you is, it's my understanding that during a construction process, there's the liability coverage for the land, which the homeowner should, or the landowner should maintain.
Right.
There's the builder's risk, which could be owned by either the property owner or the builder themselves. And then there's also the general liability and workers' comp of the contractor and their subcontractors.
Correct.
And that should be the entire blender of insurance that goes on during a construction project, a rebuild or a build project. So here's a couple of questions that we've been asked before. So if somebody gets hurt on the property job site and they're on the, let's say they're on the construction team, what insurance would cover that?
If you have a general contractor and a subcontractor is injured, that is the responsibility of the general contractor. The subcontractor would normally provide proof of insurance to the GC that he has liability, worker comp, and everything. If he doesn't, then it comes back on the responsibility of the GC to provide coverage for the injured party. Now, here again, as the homeowner, if anyone's been in a legal tangle, they name everybody. Okay. Everybody gets named in a suit. So the homeowner, whoever owns that property is going to get named, and then you have to defend yourself and get dropped. That's why you want to maintain liability insurances for the defense.
That's a good point. Next question. Properties under construction, open job site, material theft. Properties taken off the property without anybody on the job site. Where does that get covered, or where let's say it's sizable enough that you actually want to engage an insurance company. It's not just a couple sticks of lumber.
Right.
Where does that go?
Yeah, I mean, theft, most builder risk policies cover theft of materials that are stored at the job site, and some of them will endorse for off-site storage of property. Like if you're keeping it in a lay down yard or something like that, you may have 25,000, 50,000. If you do $1 million house, you could have $100,000 of materials floating around. So you got to know what your limits are. And sometimes that's why it's better with the builder having the policy, because he knows what limits he wants to secure in the house where everything is. But if it's a theft, I can say from probably 5 of the major carriers that I know, they all require a police report. No one pays mysterious disappearance. If you just say, well, I showed up to work and all my stuff was gone, we got an issue. Give me a police report, the value, the invoices, things like that. And that's going to be covered under the builder's risk policy.
Let's go back to the first question. Somebody's injured, but they're not a contractor and they're not in the actual construction. So, well, okay, let's back up. Somebody's injured. They're not a contractor, but they're on the job site. Where would that fall? That may be a tricky one.
You could end up with what would happen there is the general contractor and the homeowner both are going to get named in the suit. You know, whoever owns the land is going to get named in that suit. If someone's walking down and trips over a 2x4 that was laid out, and you know, by a sidewalk, the guy's just walking and trips.
I think this is more like the curious neighbor peeking
Oh
around.
yeah, walking around the job site, absolutely. You know,
Yeah.
if they walk around, they fall. The homeowner's going to get sued. That's why you got to maintain liability on your property. You know, now a lot of times they will exclude. You know, and now we get into a whole. If it's a big project, you know, and I guess you got to depend aside. You can get owner contractor protective policies, which takes all the liability from the property owner to the GC for everything. They're expensive. You know, and the GC has to secure that policy. But in other words, he's willing to absorb all liability for that land, for everything that's happening on that land while he's there on the job site. I see that more in big commercial projects because of the length of time that a project may be going on. But you do have your neighbor that's going to walk around your house. You know, as a builder, you try to keep them people out. You know, but if someone goes on your property and trips and it's not construction related, and that's where it's important for the homeowner to maintain liability insurance. Don't let your homeowners go back. What Tad said, where he reduced it to 90,000, he's able to keep his all liability. You got to do that or buy a separate liability policy for the land.
This was a fun one. Contractors' tools or equipment are taken off the job site when they're not there.
Okay, contractors' tools and equipment, that comes under what they call an equipment floater. You can buy that. That's not normal. Some builders' risks may give you $2,500 in tools coverage. Here again, if the homeowner's buying that, you're really not concerned with that. The builder may be. My people I don't put them contractors' equipment and tools. I don't write it because it's not worth the premium charge what you get back. You know, it's kind of a mute, but most of the time the GC is going to tell the subs, you know, if you leave tools here and they're stolen, that's, you know, your builder's risk policy. The easiest way to remember is it provides coverage for everything that will become a permanent part of the structure. So if your windows and doors are delivered and you lock them in the garage and you come back the next day, and I just had a builder lost 23 windows. Windows and doors were delivered and he went out there and all 23 windows are gone. You know, and it's bad enough losing that, but now you got the time to replace that, you know, with material shortage. Now you extend the construction time. It may be 2 or 3 months added to the delivery date because now you can't close in, you can't paint, you can't sheetrock, you can do nothing else till the house is closed in. You know, but that would be a builder's risk coverage.
I'm going to ask this question. What do you see quantity wise? Like, what are your most common claims for builder's risk coverage? I mean, statistically speaking, you see this claim happen a lot, then this claim happens a couple times, and I never see this claim. Can you give us this insight as to what you see?
You know, the biggest thing that we see in builder's risk coverage is probably number one as far as frequency is theft.
Okay.
And especially with the cost of materials. I mean, it's a wholesale. I'm having builders, I'm telling them, put field cameras up, you know, lock it, don't put anything valuable, store off site, anything you got to do, because they're cruising around the job site, stealing lumber packages. I had one guy that lost a $50,000 lumber package.
Ugh, okay.
You know, so yeah, I mean, they'll come in with trucks and load that stuff up, appliances. So you got to watch that. You know, second off, storms, probably hail. Hail damage is the biggest thing on roofs. And the problem with a hailstorm is you normally get entire subdivisions. You know, you're not going to get one house with it. Here again, when I'm insuring builders, they may have developments going. All of a sudden, I lose 10 houses had hail damage. You know, and you got $20,000 a house you got to change out. Down south here, we deal with hurricanes. The last 2 years in Louisiana were not good for us. But it comes and goes, and that's a finite. You know, sometimes it depends on your concentration in business. you know, out in your areas, probably the fires are a big thing, I know. Yeah, I'm just looking at that note from Lisa, experiencing theft. Yeah, theft is, it's crazy what's going on. People will destroy a $4,000 AC unit for $75 worth of copper tubing. You know. Yeah, so that's the biggest thing. It's always safeguarding your stuff out there.
Well, I find it interesting that it from a quantitative standpoint, from a data standpoint, and I love data, from a data standpoint, the number one actual claim, you know, filed is actually against theft, right? Against building material and not only
Right.
material, but also appliances and everything else. So
Right.
that's important. So as a builder, you're right. I mean, you're so focused on getting the work done, getting the subcontractors and the material to arrive on the job site on the same day so that they can execute. And with the supply chains out there, there's been a lot more delay. So you're I mean, there's times where you have stuff ordered, then you're struggling, you know, like, hey, well, I can get it today, but I can't get it for another month. Well, I'm going to get it today, right? So
Right.
even though I don't need it for 2 weeks.
Oh yeah.
Any other advice that you're giving out? I know that Annie, Lisa, and I, with their United Policy Group, have been talking and just trying to talk through suggestions. I mean, you recommended, you talked about cameras, you talked about, do you recommend storage containers, like little C containers, the 20-foot rentals? Or
Yeah, if you can lock up, you know, I tell people, one is, you know, when you put it in the house, you're asking to get it removed. I've seen builders put stuff in the garages so they don't have the garage doors up.
yeah,
And it's like just asking somebody to stop and go shopping.
I can tell you that in our area, storage containers on 2017 Tubbs Fire Survivor in Santa Rosa, they would bust through anything. The whole neighborhood is dark. Nobody's seeing them. We're not having calls. So there was no.
They just they don't care, you know. And it's we had one incident in one state where it was actually a delivery driver delivering materials, and then he was just advising people what he delivered and where. You know, it's just
nice.
like a black market thing. He delivered by 4:30 in the afternoon, and when they got there in the morning, it's all gone.
Nice.
Yeah,
Nice.
so it's crazy, but it's a big. Had a builder in Memphis, a fairly large builder, and he ended up having to put cages and low jack units on all of his AC units. You know, basically, like if you shake the cage, the police are coming. Well, he reduced his theft claims by 98%. Of course, other builders in development weren't as happy because they just went to their houses. You know, the more you protect yours, you're just going to divert. They're not going to go away and change what they do. They're just going to go hit somebody else. So anything you can do for security, lights, fencing, keeping an area lit is really important. If you have lighting and stuff, if you're trying to, you know, especially if like you're doing the builder's risk, you know, you want to protect your stuff, and that's what you can check.
I personally had cabinets lost, and the challenge that I ran into was the cabinet company had dropped them off. You know, I mean, he brought the big truck, he dropped them off, he put them all in, he put them all in the kitchen. He was coming back the next day to install, and they were all stolen. And I mean, tri-barred the door in and got everything in. And then I looked at David and I said, "You took pictures, right?" And he said, "No." And I said, "I have nothing to go back on the policy. I have nothing." And he had to call his insurance company, and it was a mess. But it really was a situation and that's one of the things that we've started to implement. You know, you've got to photograph and prove, you know, delivery and make at least start a record of all of these things so that you can sit there and go, hey, look, if you're not going to bolt it in the same day, which we started recommending. I told him, I said, do not drop stuff off for a next day installation. You bring in and you screw in that day, and that becomes or when you're getting windows delivered, have the crew on site, have them pull off the truck and put them right in the house, right? So that's one way to get it done, although that doesn't seem to deter everybody.
No, it's amazing.
Is there any sort of limit that the builders have to kind of, I realize there's common sense, but is there any limits insurance wise as to how much they can put on the lot that the insurance company would cover? I mean, some of these builders just stockpile on that lot.
Right. And I mean, most of your policy is going to have a limit. Now you can, and here again, it's increasing that limit based on the construction of the house. We start like in our policies that I use, I have a property stored on site for construction of a limit of 25,000. And that's, okay, you're gonna deliver your roof shingles, you're gonna put them in, and you're gonna install them, you're gonna have your cabinets come in. If you want to increase it to 50,000, you can increase it to 50. I did a house in South Carolina. We had $500,000 on storage. She was building a $6+ million home, and she had doors. She had a set of doors over 400,000. So we had to increase. Oh yeah, we had to increase limits to cover. But that's where it's talking with the builder, like where you're going to lay it down. And that's what sometimes if you get into stuff like that, you're better off having the builder do that, because then you, as a homeowner, you still have recourse. If the builder doesn't insure something correctly, you can go after the builder.
Great. Here, go into that for a minute, right? So,
well,
what does
if
that
the builder,
mean
so if I'm a builder and I'm building a $6 million house for you, and I have a $25,000 limit of materials laid down on the site, and that's all I have, and you've got $250,000 worth of materials stolen, you're going to be looking at me to make up that $250,000 loss. Someone's looking for that. So you want to make sure that you have adequate, when you're in discussion with the builder, if he's doing the builder's risk, how much materials are you going to keep at your facility? How much is laid down on the job site? Especially when you get into remote areas. I mean, you can have a fortune sitting on the ground and lose it. And if the builder doesn't have adequate limit, your only recourse is suing the builder to recover that. So you really, that's a question to ask your builder. Do you think theft limits are adequate?
So would you recommend that if you put the homeowner put the policy on, that you had the builder sign off that he had read and understood?
Well, if you buy the builder's risk, you just let your builder off the hook. He's not responsible for that policy. That's why a lot of guys don't want to touch it.
Got it.
If it's underinsured or things like that, now, because you secured the policy, you're the named insured, you're responsible for setting the limits.
And you might actually have to get involved in the delivery schedule in order to make sure that they don't exceed the product that's on site that's now at risk.
Yeah.
Holy cow. Okay.
Yeah. And another thing, like, so let's say $1 million house, what you're at, your kitchen cabinets, 100,000, you have the cabinets being built, well, they're at the custom cabinet maker's shop. Well, you're saying don't deliver them for 2 weeks. Well, once he's built them, he sent you an invoice. He's storing them at his facility. That's your property. His shop burns down. He's not liable for your cabinets because they're not his. So you have to start understanding where all this.
Point of clarification. He sends the invoice. They're not delivered, they're not installed. If you don't pay it, are they still under the ownership of the?
Well, no, because once you've accepted it, let's say he's built them and he's ready to ship them to you. And he says, when you want them delivered, you say, hold them in your place for a week.
Okay.
He goes, okay, they're your cabinets. I'm not going to charge you any storage. His shop burns down, your cabinets are burned. He's not responsible for your cabinets.
What if you don't pay what if you don't pay the invoice till they're delivered and installed?
He's going to sue you. Once the job's completed, and that depends on your contract. So those are all things, you get into so many areas that overlap, and there's so much, I know we talked earlier, but, insurance is one of those things, like it's understanding that contract. What are you responsible for? Who's responsible for what? What are the limits of exposure, and understanding,
Well, and I want to add one more thing. Please, please, please don't assume that builders are experts in this topic.
Oh yeah, don't do that.
Please, okay? You would be hurting yourself. You would be hurting the entire operation. Do not assume that your builder. This is not something they teach us in general contractor school. We have to go to friends like Helmut in order to ask these questions. And I've learned things, and I've been doing this for 15 years. So this is not a commonality amongst all the builders. Typically, they're so focused on getting the construction done. They're focused on getting the plans. They're focused on the material. They're focused on all of that. insurance can almost be looked at as a nuisance. And that's a very dangerous way to look at insurance, especially with what we've learned here today regarding the way that it can cover your butt when you are left out to dry. So I think that the takeaway for me is open, honest communication, walking down all the different scenarios that I think may or may not happen, so that I understand ahead of the game, what's going to happen with my insurance agent, with my insurance policy. Playing that, insurance bingo questionnaire. Hey, what if this happens? Hey, what if that happens? Right, kind of thing. And then really understanding and having an honest conversation with the builder, understanding that this is a cost to the project, but who's going to be responsible for this, owner or builder? Like I said, it's really up to either. It's a misleading name when we call it builder's risk, because it's really project risk is what we're talking about here. So I want to be respectful of time. Any other questions that we can answer? This has been a great conversation, a great in-depth view and dive into builder's risk. Lisa, Ann, thank you for speaking up so much. Thank you for the rest of the participants. Any other final questions that you're burning to ask Helmut?
I would just like to say that you just made rebuilding that much scarier, Helmut, and I appreciate that.
Insurance is one of the, everybody hates it till something bad happens.
Yep.
And then you're saying, I wish I knew that. And that's, insurance, and I guess the easiest way, it's a risk management tool. It doesn't remove risk, it just finances the risk. That's all you're doing with insurance. You're saying, okay, if I'm rebuilding this house and I have $100,000 worth of products stolen from the job site, how am I going to get that replaced? Mm-hmm. Well, I increase my theft limit for materials used on the job site from 25,000 to 150,000. Or you're going to use offsite storage. Those are things. So if you're, if you say, hey, Mr. Builder, I want you to secure the policy. I want to know the company. I want an A-rated paper. I'm going to start something real basic. Try to use carriers that the AM Best A-rated. Like, we won't go to a carrier that's B or below, because you never know if they're going to be around to pay the claims. So like A is a minimum standard that I go with anybody. Trying to see.
What do you do if you've already signed your contract and they come back with a B-rated carrier? Is there any recourse on that? Is there a way to deal with
it? Did you bind the insurance, or?
I'm just saying theoretically.
But that's why before you sign the contract with the builder, you want to, say, well, who's your builder's risk with?
I'm going to tell you that most survivors have no clue to ask these questions. They're by the seat of their pants, and they've been highly traumatized. And so they're kind of just on remote.
Right. And the sad part is, if something bad happens to them in the rebuild process, it just exacerbates it, the whole problem, because they were already traumatized from the loss. Now they got another loss to deal with. I could make everybody sick, but I know stories here from hurricanes where I had one client where they got the insurance check for $80,000. They hired a remodeler. Well, she gave him $80,000 for the work was done. She gave him the insurance check. Well, he left. Right. He took her $80,000 left, never did any work. So they got a warrant out for contractor fraud, but she's like, well, will the insurance company pay me again? I go, no. They settled your loss. They're off the hook. So now, she had a major problem. So those are all things you really got to be careful of. I know we fight that here, unlicensed contractors, and that's why we push the home builders associations, getting involved, asking questions. If you talk with an agent, find an agent that deals with construction. I know insurance, everybody has a brother-in-law that sells insurance. If they don't deal with construction, you may want to get a second opinion. Just a suggestion. I always tell, I tell my builders, you can always find cheaper, but you're normally giving up coverages when you look for that. You got to find the coverages and the limits, the term of policy, understand what cancels your policy, A lot of policies. And just one thing that gets people in a lot of trouble. Let's say you have a builder's risk, a 12-month policy. Well, your house is substantially complete after month number 8. You decide to put stuff, not moving in, but you're putting stuff back in your house, that cancels your builder's risk policy. Because the house is now being put to its intended use.
Yeah, we had that in our fire.
Yeah. So you have to get an endorsement for occupancy. We offer a 30-day immediate automatic occupancy where they can't move in, but they can put their stuff in there and the builder doesn't lose his coverage. You know, that's one of the things we offer because it's a common thing. Well, the active sale is going to be delayed a week. They're here with a moving truck. Is it okay to put this stuff in the garage? Well, if you don't have an occupancy endorsement and they do, and the house burns down, your builder's risk will not respond because one of the triggers for canceling the policy was initiated, was pulled. So those are all things you got to be, you know, because I do see the claims for that, believe it or not.
No, we had a ton of people who in our neighborhood who, you know, we had lost 1,400 homes just in our neighborhood. And we had a ton of people who were like, you know, I need storage for this. I don't have any more funds. I'm going to fill up the garage. And then they would have a theft or something.
Right.
Trouble.
And then nothing's covered on the builder's risk. Yeah, so I mean, those are all, you know, all issues. And that's, you know, if you're going to put stuff on there, you need occupancy endorsements. And then you need to make sure you got that homeowner's policy for your stuff because the builder's risk is not going to cover your personal stuff.
Helmut, what's the preferred transition? Is it really, I mean, we have, as builders, we also have a problem when we have material in property before we get a CO. Because if the final inspector comes out there and sees anything, I mean, there's a lot of homeowners when you're working on properties for sale, they want to go ahead and stage, or they want to move their stuff in. And when they do that, I mean, I've had people move stuff in, show the house over the weekend, and then move everything back out so the final inspector can come do the walkthrough on Monday. I hope he's not watching. I mean, it happens.
Oh yeah.
So, but you've got to get that stuff out. But really, the situation, and now knowing what I know now, had something happened over the weekend, I would have been in violation of my builder's risk policy.
You know, that house burns down, you have no coverage.
That would have been very scary. I'm really glad I didn't have any problems. Good gosh. All right. So I put contact information, both myself and Helmut. We both offered, obviously you're going to go to him with any builder's risk questions, but we're going to have this contact information available to you. Even if you're not here tonight and you're watching this after the fact, please reach out. Please get your questions answered. Helmut's graciously volunteered some time and his enormous experience, and we're very, very thankful for him. And again, everything here tonight will be on the hvadenver.com website under the Marshall Fire video log. And please, if you found this of interest, please watch the other videos. And we are doing everything we can from an HVA Metro Denver opportunity to provide you with as much support and information relevancy at this time of need. So we're here for you. We're here for the builders. We're here for the homeowners. We're really here to make sure that everybody gets what they need. And if you have any additional questions or concerns, or even additional thoughts as far as future videos or future interviews that we can do, please let us know. We're here to support you and serve you.
Yeah. And I just close out. Thank you all for attending. I hope you got a few points out of this that are helpful. My contact information, if you send me an email, just reference the Marshall Fire Task Force. And that, because some of these emails, if I don't know them, they're going to get in my junk box. But once I see Marshall Fire, I know it's a question related to this. And I will answer your questions and try to help as much as I can in any guidance.
Great.
Well,
great job, guys. A lot of information. Thank you.
Thank you.
Fantastic. All right. Thank you all. And with that, have a great night.
Have a great night. Thank you all.
Good night.